I'm certainly not asking for investment advice or anything like that, but curious what your take is on, the performance of assets where people should look at potentially to deploy capital over the next year or two. I know for some time you're fairly down on gold and, real estate and that kind of thing, but there's a lot of real estate investors here and probably curious on your take on real estate in particular.
Okay. Yeah. Perfect question to sum up here. Okay. Stocks definitely go down. And of course, the more leverage, the NASDAQ will go down more than the S&P and the Russell and more than the S&P. Okay. The S&P is becoming the safe haven, but they're all going to go down. 80% or more. Okay. If this thing really flushes out. Real estate, second real estate bubble looks exactly like the first one, but started at higher levels and went to higher levels. Real estate this time to go back down to fair value has to go down 50% instead of 34% last time. That's going to be the biggest hit most people get. So and stocks go down 70 to 90% like in the early 30s, not normal 40 to 50% major shakeout. So the key is there is nowhere to hide here. Investors have to get out of the way. If you have a main home and you're going to stay in it, and you have a vacation home, sell the vacation home, okay? Or if the vacation home's where you're looking at retiring, sell the main home now and then move and go ahead and retire in that vacation home, but minimize your real estate exposure, okay? And people ask me, oh, Harry, I got this one house with a high debt and the other one with equity. I should sell the one with high debt. No, sell the one with the equity and get all your money out. The one with the high debt may end up having the bank take a lot of that hit. If the banks are going to have to restructure debt at some point, and they're the ones that lent too much money. Get lean in real estate. As soon as you can, because real estate's hard to move. You just have to be out of stocks. There is no, defensive sectors might go down 50% instead of 80. I don't care. I don't want to be there. Where do you be? And this is what's proven, not gold. Gold did the same thing it's doing this time. It edged up in the early stages of the last recession, then early 2008, and then crashed 45, 50% right into the bottom, okay? Gold went down in the end. Gold was not the worst place to be. Did well early on. Gold's done that here. I expect gold to go to 1,000, give or take, before it's over. And then it'll be a great long-term investment because the future is Asia, and Asians, particularly Indians, the biggest Asian factor going forward, not China, India, they love gold, okay? So gold's going to be 3,000 to 5,000 one day, but not because of a crash thing. It is not the safe haven, wasn't in 2008. So stocks down, gold down, real estate down. Multifamily is the most stable real estate, okay? Where do people go when they can't afford to buy or when the banks climb up? But then they have to rent, and then there's people renting anyway. So it's multifamily. If I have to own real estate, I wanna own multifamily. I'd rather be out of everything if I could, okay? Yeah. But multifamily will hold up the best, and more people will be driven to them out of despair. You're like the Treasury bond, you're like the safe haven in real estate. And this is proven. I have to argue with people like Peter Schiff all the time, and it should not be an argument. 2008, gold crashed in the end, and the Treasury bonds went straight up in reverse. And when the things got their worst in mid to late 2008, towards that bottom, the Treasury bonds were the safe haven. The longer, the better. 30-year went up 60%. 10-year went up 30 to 40%. I'm projecting some of these Treasury bonds and ETFs like ZROZ, ZROZ, TLT can go up 40, 50, 60, 70% in this crisis. And here's the bad part. There's no diversification in a downturn. All financial assets bubbled up with easy money and all these policies. They will all go down. The only safe haven are the AAA corporates, and even more so, and I don't even want to bother with the AAA corporate, the 30-year Treasuries, the best single thing you can buy. Or again, ZROZ is a 25-year average between 10 and 30. TLT's 20-year average. The ZROZ will go up 50% faster than TLT in a crisis, already proven in recent time. So I'm telling people, hey, you could be in cash if you're really confused. Best thing, be in the safest bonds in the world, longest term U.S. Treasuries, just for the crash. People say, well, Harry, what about down the road? I'm not saying the next boom, you need to be back in stocks, and you need to lean back towards tech in the U.S. and Southeast Asia and India, where the growth is going to be, not even China so much. So that's the future. But now there's only one thing to do: preserve your money. And the only way to grow it safely in a crisis is these long-term Treasury bonds. They are the safe haven. If you don't believe it, Look at what they did in 2008. Only thing to go up when even gold went down, and gold was the second best because at least it held up half the way through like it is now. I'm expecting gold to go down to $1,000.